Here are clues that interest rates may be headed even higher. Many people were surprised by the relatively quick rise in interest rates. One minute they were in the market for a new home or car, and the next minute they're delaying those plans because of the skyrocketing cost of borrowing. They're hoping that rates will get back to the level they were a few years ago, but the era of ultra-low rates appears to be over. Indeed, our October 2020 Elliott Wave theorist showed this chart and said, the chart depicts a 78-year history of the interest rate on the U.S. government's 10-year notes. The 39 years of rising interest rates from 1942 to 1981 preceded 39 years of falling rates from 1981 to 2020. Interest rates likely bottomed in March, which means bond prices have begun a significant fall. That scenario has played out as the October 2020 theorist anticipated. Here in mid-2023, however, bond market sentiment is hopeful, at least in some quarters. In other words, there are those who now expect lower interest rates and higher bond prices. Here's a chart and commentary from our July 2023 Elliott Wave financial forecast. This chart shows the weekly close of 10-year U.S. Treasury notes and the results of the weekly J.P. Morgan Treasury Client Survey. It is astonishing to see that J.P. Morgan's clients are more bullish on U.S. Treasury prices than at any time in at least the past 10 years. High levels of investor bullishness have generally coincided with highs in the price of 10-year notes. In other words, when most investors are either bullish or bearish, financial markets tend to go in the opposite direction. Maybe not immediately, but often sooner rather than later. It would be a good idea for an investor to combine sentiment with Elliott Wave analysis. And do know that our July Elliott Wave financial forecast provides Elliott Wave analysis of the 10-year Treasury note yield and says the wave pattern is clear. Learn how you can access our financial forecast service by following the link below this video.